Again with another banger. Today we are going to analyze we are going to do analysis for synthetics indices, especially on the crash and booms indices. As you can see here, we have already taken a trade on crash 1000. It's already in profit. We already made some dollars here. We have doing analysis for the 30-minute chart, that is crash 150 on a 30-minute time frame. Guys, let me tell you, on these crash and boom indices, I'll advise highly to use price action while doing analysis, since price action, by price action I mean you use trend lines. You can use support and resistance levels. As you know, support and resistance level, a support level is an area on your chart where you find buying pressure, where is a resistance level is an area in your chart where sellers come in, and you find what do you find? You find selling pressure comes in. But mostly I like analyzing synthetic indices using trend lines. They usually respect trend lines very much. As you can see here, this is where we started our trade at around it was 14th at 23:30 p.m. This is where the journey started. We had this lower low, and then we got this this is a higher, this is lower high, this is higher low and high. You got this higher low, it has already touched the trend line, and you got this doji candle. This one is indication of a buy signal, so you're supposed to be ready to take a buy position from this point. You take a position from this candle, you buy up to this resistance level. You can see there's a resistance level here, and then the market dipped down, and we got this resistance level. After this resistance level, it's got a support here. You can see this doji candle over here. Cameraman, I think you can adjust that, you can zoom that so that they can see. My cameraman has just adjusted the camera. You've seen this doji candle. Cameraman has just adjusted the chart. You can see clearly where the doji is. From here, yesterday around 1 a.m. I was awake, so I saw this opportunity. I took a buy, and it made me around $7 from this point to this point. Now what we are doing, we are waiting for the market to dip down up to this red line. It's an area. Remember, it's not a line, it's an area. This area, when the market comes back to this area, I'm gonna take a buy, and possibly this is where I'm gonna take my profits around 97.90. That will be around let's see how many pips. That one we're gonna have how many pips? We got that is 14 bars, that is 16 bars, that is around it will gonna move 0.25%. That is good profit for the day. We can call it a day, but for now we're gonna stay out of the market and we wait for the chart to come back to this level. The level I'm expecting is 97.64, because here you can also draw across a trend line from this level. You can draw a trend line from this level, this way, that way. After you draw this trend line, now you can wait the market to come to your trend line level and then take a buy. Yeah, this around this area. That one, that is 97.70. That is my main area of I'm checking on. I'm watching this area, guys. You can see I'm having a running trade on crash 1000. There it is. We are already on a buy, but there's a resistance level here, so we want to close this trade because you can see on a 4-hour chart there's a resistance here. So let me close this at 0.6 USD. I've already closed the trade. I'm gonna find a new opportunity later on. So guys, what I'm trying to tell you is you have to check all time frames. While you're analyzing your charts, you have to check on all time frames. You have to start analyzing on the higher time frame. You have to start on a 1 week time frame. You come to, that is 1 week. Let me load a 1 week chart. That is a 1 week chart. You see on crash 99, the market is bullish because of this blue candle. You see this blue candle, and then after that you go to 1 day time frame. On the 1 day time frame, you get these candles for the last how many days? 1, 2, 3, 4, 5, 6, 7, 8. For the last 8 days, the market has been bullish. Then you come to 4-hour time frame. On the 4-hour time frame, you see what is happening. The market is on an uptrend. As you can see, the market is above the moving average. It's above the moving average, but we're starting to have red candles on the 4-hour chart. That is on crash 99. So this one you'll have to wait until the market comes to the 20 moving average. You'll have to wait, so you be patient. So guys, as I told you, in trading most of the time you have to be very patient. You have to be very, very patient. You wait for the market to come to you. You don't run to the market. And when you wait for the market to come to you, definitely you're gonna make dollars. You're gonna make profit on trading. So you can draw this trend line. Let me see what is happening on crash 99. It's very easy to make money on these indices. Very easy. It's very, very easy because you just use pure price action. Once you draw a trend line, the market respects the trend line. Once it breaks the trend lines, you wait for a retest back to the trend line and you take a sell. Like here, you see what it happened. You see this moving average, the market was above the 20 moving average on the 30-minute time frame. Once it reached here, it made a double bottom. After the double bottom, the market came back to below the 20 moving average. After the 20 minute average, it broke the trend line. As you can see here, our trend line is just here. Let me show you guys. This is our trend line. You see this level. You see this level here. This is where the trend line was broken. So if at all I have to enter and trade on this market, I have to wait for a retest back to the trend line. You wait for a retest to this level and then you enter. But for now, we're gonna stay out of that market. Let us analyze cryptocurrencies. Let us analyze gold. Gold is a very good asset. Cameraman, can you adjust gold? Can you zoom in the chart for gold? Yeah, our cameraman has just adjusted the gold chart. As I said, we start from the higher time frame. Let me show you how gold is very easy to trade. Gold in the USD on the 4-hour time frame. Let us start analyzing from this level. We got a higher low, higher high, high low, higher high, high low, higher high, high low, higher high. And then after this point, it came and broke our higher low. You see the market came and broke our latest high low, and now it has retested. You see this one? There's a red candle here. That is on the, remember guys, we said we analyze the market on a bigger time frame. So this is a 4-hour time frame. You see there's a red candle already that has there's a red candle already that has already formed. And yes, the market is now making a series of higher lows and higher highs. So what I'm going to do, since the market already closed on on Friday, in the evening, I'm gonna wait for tomorrow. Tomorrow is a Monday. I'm gonna have to check my fundamentals analysis. I'm gonna do fundamental analysis to check whether there will be any news if there's no other news, I'm gonna strictly trade on gold on pure price action. I'm gonna use pure price action. Pure price action is the best method to trade gold. But remember, guys, you really have to have a good capital when you're trading gold, when you're trading cryptocurrencies like BTC, USD, when trading Binance USD, all cryptocurrencies, you have to have very good capital, guys. That is just a piece of advice. I've been trading for the last 7 years, so I'm telling you out of experience. I've done it over and over. I know what gold can do to your account. Now that is gold. So we can't trade gold now because the market is closed. There's no bank that is operating at this moment. So we're gonna wait for tomorrow around 8 a.m. London session. That is the UK session. When the UK are awake, the banks are open. The president of UK starts tweeting and releasing news about England. The market is gonna start moving, and that's where the action starts. That's where all the action starts. That is gold. Let us analyze on. Let's go back to synthetics and indices. We analyze 2 and then we sign out for today. I'm having meetings today the whole day, so I won't take most of your time, guys. So let us take on this volatility 91s. As I said, we start on a 1-day time frame. What is happening? You check what is happening in the market. For the last how many days? For the last 5 days, the market has been bullish. You can see that was on 11th, 12th, 13th, 14th, 15th. Today 16th. The market is bullish. So in your mind, you already know the market is moving upwards. So you come to 4-hour time frame. When you come to 4-hour time frame, you can see there were two red candles. One was a doji, one was slightly not, it was not a doji, though it has a wick at the lower end. And then now we are having now let me show you how to analyze this volatility 90. Nowadays I use something called CRT. CRT is a candle range theory whereby you mark the highs and the lows and the close of a 4-hour candle, and then you mark your area of interest. After marking the highs, the lows, the high, the lows, and the close of the previous 4-hour candle, the previous last 4-hour candle, you check at the for you to enter the market, you have to go to the 5-minute time frame. You see, like here I have already marked my levels. This is my level for the previous 4-hour candle. It was a red candle. This is where the close was. Let me use the red horizontal line. Let me use the red horizontal line as my. This was the close of the 4-hour candle. This was the high. This was the highest point, and this was the lowest point. This was the lowest point. So after you mark your lows, the highs and the lows, now you come to 5-minute time frame. This is the 5-minute time frame. Now you are searching for entries. Another thing, guys, you have to already have incorporated the 20 moving average on your charts. The 20 moving average helps you to once the market crosses above, I said